I'll make it quick. Here are 6 things I recommend people do to prepare. Here's the 6 things I'm kind of doing. 1, I'm moving assets to cash. People hear this phrase, cash is king. It's a pithy little phrase that we throw around.
Sure.
But let me tell you something. When the market turns, anybody that was around in 2008, 9, and 10, they know that lending was really tight. And the people that were getting the deals were the ones that had the cash. So I'm a big believer in right now, hoard any cash. Don't spend cash on things you don't have to. Don't buy thin deals just to have money out there. I'd rather have the money sitting in a bank account waiting for a great deal to come along than to put it into a marginal deal right now. So hoard cash. 2, now's a great time to open credit lines. I'm not saying people should take out credit. I'm not saying people should run up their credit cards or open a HELOC and take out the money, but have the money available. Because the next best thing the next best thing to cash is a credit line. So I went out, I own my house outright. I've never had a mortgage on my house, but I went out about 6 months ago and I got as big a credit line against my house as I possibly could. I want to know that I have that cash available in the case that some awesome deal comes along and banks have decided they don't want to lend to me anymore.
Yep.
So I don't ever have to use that. It costs me nothing to have it sitting there waiting. But I'm telling people, raise your credit card limits, get your HELOC, get your personal line of credit, get your business line of credit. Just have that money available in case you need it. Along the same lines, build credit. Now's a great time for anybody that doesn't have great credit. Start building your credit, because right now you can go to a bank and you can get a loan with a 660 credit score or 680 credit score. Again, anybody that was around in 2008, 9, and 10 knows that you're probably looking at 720 or 740 to get a loan. And it takes 6 months, 12 months, 24 months to build your credit back up if your credit isn't good. So if your credit's not good, now's a good time to start focusing on that, because by the time you get it to the point where it's 750, you're probably going to need it. I like to say, if you, again, going back to the, assume the worst case scenario you can think of in the market. If it's 15%, 20%, whatever it is, get rid of anything that can't handle a drop of that amount. So if you're holding a flip that can't handle a 15% drop, figure out how to wholesale it or get rid of it now. I like to say the same thing on the rental side. If you can't handle a 10% drop in rents or a 10% drop in occupancy, and you think that's the worst case scenario, get rid of that property. So don't ever go in thinking the worst case scenario is going to blow you out of the water, because you don't want that. Restructure short-term debt. So I'm a big fan of interest rates are relatively low right now. In 2 years, not only could interest rates be higher, but if you have a loan that's coming due, if the market's bad, the lender may be hesitant to try and restructure that loan. They're just going to say, "Pay me off. I don't want to extend this." So if you have any loans that are coming due in the next year or two, see if you can work out something with the lender where you extend it for 3 or 4 or 5 more years, even if you have to pay an extra quarter point or whatever it is. Having longer term debt will help you weather any big storm. And then finally, and this is a big one, especially for house flippers, if you see the market start to turn in your area, cut your losses. I saw way too many people during the last downturn who basically chased the market down. They bought a property and one day they realized, oh, this sucks. I'm going to have to break even on this property because of the market. I don't want to break even. I'm going to wait a couple months. I'm going to keep marketing it and see if I can make just a little bit of money. And then a couple months go by and they're now down 1%. And they're like, oh, I don't want to lose money. I'm going to hold on to it and wait for the market to get me to break even. And before they know it, they're down 5%. And 3 months later, they're down 8%. And they basically chase the market down because they don't want to lose a little, so they end up losing a lot. So big piece of advice for any flippers out there. Once things start to turn, you're going to lose buyers. You're going to have people that can't get lending. The market's going to continue to drop. It's not just going to jump back up. So don't chase the market down. If you see you're going to take a little loss, nothing wrong with a little bit of a loss. It's better than a bigger loss after more time. So those are my 6 pieces of advice on how to prepare.